Good evening, traders. I hope everyone has had a splendid trading day. We've had a lot of activity, and joining me today is Robert. Maybe Robert, you can say hi before we start.
Hi, good afternoon, good evening, traders from wherever it is that you're watching this presentation from. Welcome to another fruitful presentation. Let's have a great conversation today. Because being Monday, we know there's a whole lot of lack of liquidity in the market, but it's been an amazing day actually today. So let's try and discuss what has happened in the market and a few setups we have in mind. So Sam.
Yeah, actually, there are setups you're looking at in the morning.
Yeah.
I believe they went well. There was gold, but we'll have a look at them later in the presentation.
Yeah.
For today, first, we need to cover the topic for the day, which is we're doing pending orders, and we're also talking about risk management. So that's where we're going to start. We're going to define these two because there's usually some confusion around a few types of orders. And then from there, we move to risk management, and then you see how we can wrap it up. So we know the most basic type of order is a market order. This is your order to either buy or sell at the current market price. For example, in this case, we have Euro USD being 1.214. That's your bid, or that's the ask. The bid price. Oh yeah, that's the bid. And then the ask price being 1.2142. So usually you get, if you're buying, you're getting the higher of the price, and if you're selling, you're getting the low of the price. So in this case, you'll be buying at your ask and selling at your bid. So a market order just prioritizes on time. You need to be filled in there and then. Now the problem with this one is sometimes you have markets that are fast moving. For example, when there is news or when there is not enough liquidity. So that's a factor that you need to be careful about when doing the trades. Yeah, so and then number two, we have pending orders. So let me switch to, yeah. So for pending orders, you have, these are orders to buy or sell an asset. This is a currency pair, commodity, stock at a certain price in future. So the assumption is that's not the current price, but at some point you will see, or it will be filled in automatically when the price reaches there. In this case, we have two types of orders. We have limit orders and we have stop orders. Now this is where the confusion comes in. A limit order, and you don't have to cram this because we'll show it on the charts. A limit order is an order to buy below the market or sell above the market. Yeah. So when you say we are at a price of say 30 and the markets start dropping, you enter a limit order when you're anticipating a reversal. Yeah. So if the market was dropping from 30, then you'll have to enter a buy limit order. Yeah. And if it starts rising, then you'll have to enter a sell limit order because you're anticipating a reversal. Then a stop order is when you're anticipating a continuation. So in this case, stop order is an order to buy above the market and sell below market. So this one is very straightforward. Now on your MT5 or on your desktop version of MT5 and MT4, when you attempt to place a limit order, say for example, when you attempt to place an order above the market, you won't be able to see, for example, a sell limit. Actually, okay, above the market, you won't be able to see a sell stop and a buy limit. So for desktop versions, they sort of modify it for you. So you have only the options you can use in that case. So let me give an example of what you're talking about. Just a minute. Also, we'll talk about today's charts because I believe you have some live trades, Robert.
Yes, Sam. Got some live trades on Euro USD.
Yeah. So let's move to the charts before we get there. Can you see my charts?
Yes. Your chart
Okay.
is quite visible.
So we had a morning analysis on this, trying to let me see. Okay. So we had some morning analysis, but we'll go through this later. For now, this is Euro USD. We had a channel. I believe we talked about this in the morning session. So in this case, for example, I want to put an order here. The current price is 0.9179, and I want to put an order here. If I right click, I can right click at the point I want to put the order, and I'll only be able to see limit order, number one. This is when you're anticipating the market to sell at that point, or a stop order, a buy stop order. So I'm only seeing a sell limit and a buy stop order at that point. I'm not seeing a buy limit. I'm not seeing a sell stop. However, if I want to go below the price and place any order over here, then now it's changed. I'm only seeing a buy limit and a sell stop. So that's the key difference. And when you're trading using limit or stop orders, this is when you believe there's going to be high momentum in the market and you won't be able to catch few trades. That's I'd recommend the best time to trade with them, because if you're purely doing technical analysis, I wouldn't recommend, for example, placing a pending order if you have the time to look at the charts. So that's one thing to note, because how the context of the market is constantly changing. So you can think about it when you know how your strategy looks like or how your entry looks like. Placing a pending order in most cases is devoid of the context at that time. So in most cases, unless you're doing either fundamentals or your strategy just has to use pending orders, stick to market orders, which will serve you most of the time, unless you have some high momentum strategy that you need a limit order to fill you in at that point. And we'll talk about trade management. For now, that's the basics of it. We'll touch a bit on risk and then see how that applies to the chart. So, Robert.
Yeah, thank you, Sam, for that. Kindly change the settings so that I'm able to share my screen. I hope you can see my chart, Sam.
Yeah, can see it.
Awesome. So traders, today basically we were looking at Euro USD. This is a position I took last week, and basically we've been looking at a strong dollar moving forward. And as Sam has pointed out, even in the morning, he had this analysis where he was also bearish on the same. So with any time you're trading, you need to make sure that you have some trade management skills in play, because at the end of the day, you need to bag those pips. Yeah, you need to make sure that you're securing the bag and you're making sure that at the end of the day, you're walking out with some money. One of them, most importantly, part of risk management is to ensure that you have a stop loss in place, making sure that once the trade goes against you and there's a change in trend and you are not able to take advantage of that opportunity while it still was available, then you've already defined that this is the area I'm ready and willing to lose this amount of money, right? So you'll have to have that stop loss. But in this case, you already have a trade that's already running. So the best trade management technique to use here will be to move your stop loss some pips in profit. Right, so this is where like you're booking your pips, making sure that in case overnight a trade runs against you, then you've already secured your entry. So in this case, I will come here, for example, in this trade, the entry was at 1.1025. So you'll want to go maybe 5 pips plus. Yeah. So in this case, you'll just probably this first trade over here, you just say modify, and then when it comes to stop loss, now you shift the stop loss to 20. So, and you say modify. So as you can see, the stop loss in one of the positions has moved from 20 pips away to now plus 5 pips. So you've secured that entry. So even if something happened overnight, we know like Asian session is so volatile at times, and most of the flash crashes actually do happen during Asian session. So as a trader, you need to take note of that and make sure that you're able to secure your entries. And also one of the other thing is, as a trader, when you're coming into this trading business, you must have set out some realistic goals. I think one of the challenge you'll face amongst traders is when guys just come in and they're not so sure. Of course, there's the whole issue on not trusting their trading system. They don't know if their trading system will give them 20 pips, if their trading system will give them 200 pips, if the trading system will give them 50 pips. So as a trader, when you're starting out, it's always important as you grow in your journey. Then you already have some parameters set out. Maybe like you can say, after every 50 pips, I'm locking in my trades, especially if you want to transfer this trade into a swing trade, right? You're no longer day trading, right? So just make sure that you're securing your bag. So let me do this position also. Now, for example, this position that we've moved our stop loss 5 pips in profit, that's securing the entry. I will want now to modify that again. Take profit, maybe secure that to take profit 50 pips from entry. That comes to 0.975, right? So all these are things that you need to make sure that as a trader you must really modify your position. Take note of what's happening in the market so that you're able to take advantage of.
I think the price has already passed that
point.
Yeah.
Oh, sorry.
Yeah.
It's already passed. Yes, it's supposed to be a stop loss. Sorry, guys. Sorry. Yeah. So in this position, actually, we will use the stop loss as a lock-in mechanism. Yeah. 0.975. Yeah. So the stop loss here will now act as the take profit. Yeah. As a stop loss.
So you've adjusted or modified?
It's supposed to, this one needs to remain that way. So it's supposed to be that. So we've now shifted the stop loss to 50 pips in profit, right? So that means no matter what happens, if this trade decides to go up, to be bullish, then one position has already locked in the 50 pips. Yeah. So we have the other positions running and you wait for them to play out. So that is one of the ways of making sure that you have your realistic goals set out. In the case of Sam, like Sam had said, at times when you're using pending orders, you'll realize that maybe you are not there in the market, right? So if it's a buy limit, you are not there. So you said this is an order you're telling a broker that, hey guys, I will not be available at this moment in time, but based on my analysis, I'm looking at these opportunities when price gets to this area. If it's a buy, maybe it's on a downtrend. Like for example, in this case, if let's say you are looking at that change in trend, so maybe you could have come in as the market was moving down, then you could have set out a buy limit order here, move a stop loss, then maybe take advantage of the overnight movement that will be bullish before maybe a continuation of the bearish move. Yeah. So as a trader, you must make sure that you are setting these out. You're making, I think as a trader, there's nothing as painful as being like 100 pips in profit. Then the next day you realize your stop loss was hit.
Yeah, sometimes. Okay, so I think there's a lot that goes into it, because number one, when you're in profit, yes, it's very painful that you're in profit and then the trade comes back against you. But then the question becomes, for those who, because in this case, you are in a way adjusting the what is it called? The accuracy of the strategy, yeah? Because
Yeah.
adjusting the stop loss further down means there's a high probability of it being hit. So if the market was intending to go lower, regardless, now the question becomes, is it better to just leave your stop loss at the initial position or move your stop loss? And how does that affect your accuracy? If that is all factored into the strategy, then I think that's a good way to approach it, because at the end of the day, you have to know how accurate there's your entries, then there's your trade management, and then there's your exits. Yeah, and this is basically trade management. This ties in with the other thing. Do I adjust my stop loss and take partials, or do I just adjust my stop loss? And all those things come into trade management.
Yeah, Sam. And actually, this is where like a trading plan will help you with this. Yeah. And this is where like you'll understand most traders don't have a trading plan. So they don't know they've not factored in when things go wrong. What will happen if my stop loss is hit? What happens if I've not booked some profit, So that eventually becomes an emotional trauma for some guys, where like you are in profit and all of a sudden, maybe like, for example, for the new guys, when you're starting out, you're all over showing everyone your profits and you're like, hey, you guy, I'm 100 USD in profit, and then all of a sudden the next day, boom, you're minus 50 USD in profit, you're minus 50 in loss. So I think it's always important that you have that factored in your trading plan, just like Sam has said, such that you know your system. Maybe you have intervals of maybe every 50 pips, you're booking pips, every maybe 20 pips, maybe every 30 pips.
Yes, that's
when
true.
you're bugging out. Yeah, so when you're beginning out, then maybe you have, at least at the end of the day, you need to bag some money. Sam, at the end of the day, it's all about the money, right? How much money are you able to make an income out of this business? Ama ni kubahatisha, ama you're just you went into the market and made no money, right? Which is unfortunate. So it's always good to make sure that you're bagging those pips as you comfortably learn your system. Just get to know, like, in your system, how many pips will that system that you're using give you on average in a day or in a week, right? So because a week is better, because you're not giving yourself so much pressures and taking trades that are not necessary. So you're able to give some target, some bits of targets. Maybe you're saying like, I'm targeting 100 pips, 100 pips per week, so you're able to work with that number moving forward. So even if you bag 20 pips, intervals 20 pips, maybe the trade comes, hits your stop loss in profit, then at the end of the day, if you're able to bag your 100 pips, well, that's good. But with time, slowly, as you become more comfortable with your trade, and you'll realize maybe your trade doesn't give you better day trades, maybe it's more of a swing trades kind of system. Yeah, at the end of the day, it's all about you and being able to identify all that. So that trading plan will help you keep your emotions in check. The aspects of fear, greed, because there are guys who are greedy. You just want to bank every other pip in the market, yeah. And we all know at times it's not possible. So have an element where you're able to have a balance of the fear and the greed in your trading system. Maybe maybe there's something you can add on to that.
There are small things in trade management that people often ignore. The first one, for example, is on the issue of what we've currently talked about. If you're adjusting your stop loss, then you're changing the accuracy of your trade. Yeah, because you're increasing the probability of you being exited in that trade. And as much as it won't be an exit with a loss, you're still increasing the probability. So that's number one, you have to factor that in. And number two, if you're intending to take partials, that is, for example, if I have a 1:2 risk reward trade, and I take maybe halfway, then I'm no longer risking 1:2. My risk reward goes lower. Sorry, my reward to risk goes lower than that. And those are some of the factors. So if you're adjusting your stop losses and also taking partials, then you need to sit down and see what exactly is your risk reward and what exactly is your accuracy, and how is it being affected as the market shifts. So those small things, for example, if it is 1:2, if I'm not wrong, and you take halfway, that means your actual risk reward is 1:1.5. So those small things that people ignore are the ones that usually you tend to focus more on, especially when you can get into successful trades, because a big chunk of trading happens after you've placed the trade, not before you've placed the trade. Before you've placed the trade, that's just trade management and analysis. But during the trade, when to exit, when to adjust, when to just be patient, how to sort out your targets and all those things, that's where the bulk of the work is. And that's where a lot of traders fail to plan. And if you fail to plan, I don't know how that quote goes, but
you're planning to fail. Plan your trades, trade your plan. Simple.
Yeah. So in as much as you're planning for the entry, plan for also during the trade what you need to do so that you don't panic.
Exactly. The panic aspect is quite important. And this is where, like traders, we wouldn't insist more on this. Like, really, you need to have a trading plan in place that has already outlined everything that, this is a trade. If it goes 50 pips in profit, maybe you've already said position 1 will be closed. If it goes 100 pips in profit, maybe 2 positions are closed. And this is where, like, some, I don't know, but here in Thika, I normally tell guys, right, especially when you're starting out and you still don't trust your system, if you're so used to using, let's say, a whole lot size of 0.10, right? So you may want to divide your lot size into maybe 3 parts, right? So maybe you can have a 0.05, you can have a 0.03, and a 0.02. So they all add up to 0.10. So slowly you can bag pips, maybe the higher lot size 0.05, because now your system, you still don't understand whether your system, you're still dealing with the emotions of fear kidogo. You still have that, element. You still don't trust your system. Anytime you see a retracement, you're like, okay, or is this trade reversing? You still don't know some of these things. So maybe the first position, maybe 0.05, you can bank at 20 pips, because if you look at it realistically, almost every other day, if you find a good entry, you should be able to bag at least 20 pips in a day. Then maybe as you become more confident and your patience is growing, you can let them maybe the 0.03 and the 0.02 positions to hold, maybe like go to 50 pips, maybe 70 pips, 80 pips, depending on the ADR of that particular currency pair that you're trading. So I think that those are some of the things that we as traders, we need to understand, and especially for the newbies, that you must not be so greedy starting off 0.10, especially if you still don't trust your system. You may want maybe to hold and see, can your system hold for 50, 100 pips and so on. Yeah, Sam?
Yeah. I think you've summed it up nicely. Maybe we can look at the charts and what you think is going to happen for tomorrow.
Awesome.
This is where's your target low? Where are you planning to exit?
I'm looking at last week's low. Let me see. If we go to the daily, it's more of H4 actually. So I'm looking at this area. That's the area I'm looking at. Last week's low. Yeah, that's my outlook on it. Yeah,
I think mine is a bit similar to yours. I think I'll share it.
Oh, nice.
Somehow similar, but there is a channel. Can you see the channel? Yeah. So you're slightly almost getting to that lower end of the channel. So
yeah.
Okay. I think that's it for the session. Or you're adding something else?
No, Sam. Actually, so I just wanted to highlight that you're able to book your profits along the way. Make sure that your risk management, most importantly, trade management. Yeah. Of course, set out your realistic goals. Always make sure that you have at least a stop loss, guys. This will help you actually in the calculation of your risk to reward, right? And then of course, the monitoring of trades is where, like, you know, you make sure if you've not yet set out, like for example, in this case, guys, you've seen I had not set out my take profit target. So I've already set out one of my take profit targets, but I have like maybe like I have, I think, 6 positions on this particular trade. So as they pan out, then I should be able to bank the next 100 pips and the other 150 pips. Yeah, and we move forward. Otherwise, that's the end. That's the end of my presentation with regard to this currency pair.
Okay, I think that's summed up nicely. So just to summarize, we have talked about pending orders. We've talked about pending orders, how to use limit orders, when to use them. We've said if you have time, if you have the luxury of time, simply just wait for the trades to materialize and use market orders. However, there are some strategies that might entail limit orders, especially I've seen a lot of guys doing reversal trades on gold where they place pending orders around key areas. And that works, but make sure pending orders have also very tight stops, because you don't know what the context is if you're not on the screen. Because again, the context of the market is always changing over time. So it's always good if you have the time to just be on the charts. And then we've talked about trade management, how to adjust your stop loss. In this case, we've seen Robert adjusting. Maybe one thing, by the way, you can maybe what informed the stop loss at that particular point? You setting the stop loss at that particular point, Robert?
The initial stop loss, like 20 pips away? Or
so
which one?
so it's like a constant number, or you
Oh,
have
yeah. Or the 50 number. Yeah, the 50 number is a constant number. If you look at my entry, yeah, you'll see my entry was at 1.1025, right? So part of my trading strategy involves the quarter points. So quarter points, if you're looking at from 0, the quarter point will be 25, the next half point will be 50. You also have now another 3/4 point at 75, and then the whole number 1. So I normally go for those quarter points as areas of take profit and even entries.
okay. So
Yeah.
that's okay. So is that based on Euro USD only, or flat out across
all pairs? If you look at the volatility of most pairs have an average
currency
daily
pairs?
range. Yeah, currency pairs, they have an average daily range of 70 pips on average. So it's easy to bank 25, 50, and 75 pips, depending on the volatility of these pairs. So I normally go for those quarter points. That's an area where at times you'll realize there's some kind of a reversal when price gets to a quarter point, and then then the continuation of the trend. So for me, the quarter points work out. That's
Okay.
something I've always found as a constant for me.
Okay, so you can use a constant round figure,
Yes.
or maybe, I don't know, ATR or parabolic to guide how, or even moving average to guide how you adjust your stops, or just looking at the market volatility, which again you said is dependent on the currency pair. So I'm guessing gold will be higher. For example, you're trading gold, you'll need higher distances, larger distances. Yeah, and then finally with, pardon?
Sorry, Sam, I was about to say even GBP pairs.
Yeah,
they are
yeah,
volatile,
yeah, especially GJ. So, and then so finally we've talked about the risk reward aspect, and that you need to take note even when you're adjusting your stop losses and take profits and taking away partials. This changes the dynamic of your strategy, so it's not going to be a constant figure. For example, if I know my win rate is 60%, it's obviously going to be skewed if you start shifting your stop losses and your take profits, unless you have accounted for that in your strategy. Yeah, and having said that, tomorrow we'll be going over. Can I share my screen?
Yes.
So tomorrow, we talked about these three charts today. Euro USD was the first one. And the news that came in was higher than anticipated. Of course, we'll get into detail tomorrow at 11. And then we have, this was Euro USD, we have gold practically doing the same thing. And we have NASDAQ, which is UT 100, also doing the same thing, dropping. So in this case, you've seen we might have some slight strength in the dollar, but we'll get into this. So these are charts you can follow. Try and apply what you've learned, especially if you've managed to maybe land a trade on one of these currencies. See how your risk or how managing your risk affects your overall strategy. And from there, I think that's a good trading session.
Yes.
Robert.
Yes, Sam. So you can find us on our socials. Basically, personally, I've shifted to TikTok. Yeah? So you'll find me at Mambogo Junior. We have some educative videos on TikTok where we're looking at how to close trades, pending orders, how to use even those pending orders, how to close the partials, all these kind of trades. We'll have them on our TikTok. So follow me, Mambogo Junior. MAMBOGOJNR.
For me, it's I'm still on Twitter, but yeah. Also, also on TikTok. All my handles are Samson. There's a question about dollar and the BRICS. So this one is a very bulky conversation or discussion, but I believe it's something we can cover in a separate session. But in my opinion, do you think the dollar is going anywhere, Robert?
In terms of? The whole conversation, guys will be dropping the dollar. There's the whole issue of default. Yeah, you've had the conversation where even Christina had to defend the US economy.
Yeah,
this is a conversation that is too early because there's a lot at play. The dollar still, look at it this way. Look at the countries that still hold the dollar as a reserve currency. Look at it. I think it's more than 60% of the world, yeah, still considers the dollar.
Including China, which is the biggest holder.
Exactly, the biggest actually buyers of even the bonds and the treasury bills of the US. So that conversation is quite tricky, but I still believe dollar is king for now until otherwise.
Yeah, and not to digress too much, but at the end of the day, it will fall down into trust. Are you willing to trust these new powers with your money and the systems? Do their systems work? Are there countermeasures? Can the executive tell the judiciary or vice versa? If you know those legal issues that make sure businesses are confident in your system. So if the trust is not there, it's going to be a hard sell.
Maybe I think the contributor is looking at it from the end of backing up their currencies with, let's say, gold. Maybe that's where they are coming from, and we can see the BRICS. They really are going into that trajectory. They want their currencies backed by something, maybe gold or whatever it is that they want to have. Some commodity. And we can see if you look at the BRICS, they're really rich in commodities, right? If you look at Russia, if you look at China, if you look at a bit of SA, but at the end of the day, well, just like you said, the trust of the economy. At the end of the day, we want a country that we can trust as a world.
Yeah.
Yeah. So let's see how that plays out.
Yeah. Yeah.
I hope we've answered that guy, but like you said, we need to have a total conversation on this.
That's true. Anyways, thank you guys for attending. Tomorrow morning, we have another session. You can catch that. Also on Wednesday, we'll be back with another session. So happy trading, happy peep hunting. See you in the next one.
Cheers, guys. Happy pips hunting.